Moje ime je Bobby. Moji vlasnici nisu bili posebno kreativni kad su mi birali ime, ali to sad nije važno. Dugo vremena su me hranili sa obrocima koji ostanu iza njih, ali i sa brojnim nezdravim proizvodima prepunim koncentrata i hemije. Mislio sam vremenom da ću se pretvoriti u plišanu ili plastičnog psa.
Srećom, otkrili su Bon Appetit hranu za pse i mačke, od pažljivo biranih i najkvalitetnijih sastojaka bez GMO supstanci. Pozivam vlasnike da obraduju svoje ljubimce i da u najbližem pet shopu ili na web stranici zoodirect.ba naruče Bon Appetit premium hranu. Volimo da se mazimo, ali zdravlje nam je na prvom mjestu. Bon Appetit!
Moje ime je Bobby. Moji vlasnici nisu bili posebno kreativni kad su mi birali ime, ali to sad nije važno. Dugo vremena su me hranili sa obrocima koji ostanu iza njih, ali i sa brojnim nezdravim proizvodima prepunim koncentrata i hemije. Mislio sam vremenom da ću se pretvoriti u plišanu ili plastičnog psa.
Srećom, otkrili su Bon Appetit hranu za pse i mačke, od pažljivo biranih i najkvalitetnijih sastojaka bez GMO supstanci. Pozivam vlasnike da obraduju svoje ljubimce i da u najbližem pet shopu ili na web stranici zoodirect.ba naruče Bon Appetit premium hranu. Volimo da se mazimo, ali zdravlje nam je na prvom mjestu. Bon Appetit!
Hello there, everyone. How are you doing? Greetings and welcome to our next SAA Stock event on the topic of how blockchain technology is changing real estate. My name is Pavel Zornia, and with us today are two superstars, Andrea Grozdanić and Ajdin Kahrtović, who will shed a little bit of light on digital investment and real estate and how those two things work together. They will talk about their startup RealFi, and they will talk about their solution. So they've also added in a few innovative touches to the whole process, and we can't wait to hear what they have in store. What else on our agenda is today? So, we have the problems and opportunities with real estate investing, real estate tokenization, decentralized finance concepts, the RealFi solution, which I'm pretty sure will be the main thing for today, the future use of real estate security tokens, and after that we have a little bit of Q&A. Okay, and a few short things about Andrea and Ajdin. So, they're pretty interesting, to tell you the truth. So, Ajdin and Andrea are co-founders of their startup RealFi, but they don't do the same things. So Ajdin holds a master's degree in computer science, and he is the chief technical officer at RealFi. He also worked at a few, better said, various fintech startups before, so he has a lot of experience in the field. Andrea is the chief finance officer in RealFi, and listen to this. He spent 7 years in investment banking, and he actually worked also with JP Morgan with their clients and working on some multi-billion-dollar deals. So they're pretty diversified in what they do. And a little bit of RealFi. So what is RealFi? What they do? So they're building an app and related ecosystem to, let's say, make the whole process of real estate investment easier, to make it accessible, and let's say, because I'd like to say gamify the whole process because we're using tokens and similar. And let's move on. Let us introduce also Andrea and Ajdin. Here's Ajdin and Andrea. Hello, guys. How are you doing? And welcome.
Hi. Hello, Pavel. Thanks for having us, first of all, and also greetings to everyone who took the time.
Thank you for coming.
Hello, everybody.
Okay, then. Now, thank you guys for joining us, and I would like us perhaps also introduced you. If you would like maybe to share also a few things about yourself and about your startup, perhaps.
Sure. Just brief. I mean, thanks for the kind words about us. Just introduce a bit sort of on more personal level. So the two of us also we go back to, we're both from Sarajevo. Went to Druga Gimnazija together and go back all the way to there where we used to sit together as high school students. And yeah, as you mentioned, I since then I moved to the UK. I read philosophy, politics, and economics here at Oxford, so more sort of less of a technical background. But then, as you mentioned, went into investment banking, did all sorts of deals and advisory for clients, sort of helping them on their strategy evaluation and so on. And yeah, then obviously kept in touch throughout these years with Ajdin, and we discussed a fair few things. And it's actually, he will say a few more words actually how he got to this specific idea based on his previous experience as well.
Okay, so let me take over this
Yes,
introduction.
Please do.
Okay, so I'm, as you introduced me, and thank you for that. I'm currently CTO and another co-founder of RealFi. And as you said, I studied computer science here at Sarajevo, at the University of Sarajevo. I obtained bachelor and then master degrees, and I was a teaching assistant even a bit, teaching algorithms and data structures, but it was for a very short period of time. I switched to real industry, and through my career worked for several Sarajevo-based tech companies. It was mostly on outsourced projects. My technical experience revolved mostly around .NET, and in terms of the domain areas, I worked on as a dynamic CRM consultant on e-signature solution, travel industry projects, and many others. And what was really changing a point in my career was like 4 years ago when I started working at a company called VO. It was a Liechtenstein-based blockchain company that was developing security token offering platform. And we'll talk in a few minutes what are the security tokens. And we were also building many other financial apps, and they were all based on blockchain. And I first started there as a backend developer, but slowly transitioned to being a blockchain developer. I learned to write smart contracts, and I also was kind of a tech lead there. It's mostly because other people didn't want to go to kind of the product development meeting. So I also gained a lot of knowledge about DeFi, about the market. And also became a real entrepreneur. And the idea how the RealFi actually worked for my 3 bring this experience mostly to video.
Lovely. Thank you guys for sharing. Nice. Okay, then should we then get into, let's say, the meat of it, into the so for our first topic, more or less, we have, or better said, on our first point of our agenda. After you tell us a little bit about your team, we will go into the problems and opportunities with real estate investing. Come on, guys. Okay.
So thanks, Baba. So I think real estate investing, and this is something that holds across geographies here in London, obviously where I'm based as well, but among sort of most major cities, it's historically an incredibly attractive asset class to invest in, especially residential real estate, which is not as volatile, say, as commercial real estate. And it's it's something that anecdotally people often said, but we also looked at the data, obviously, and here on the left hand side you can see how we compared the UK residential real estate market compared to FTSE 100 and FTSE All-Share, which are sort of the key equity indices, i.e., sort of tracking the share prices of and dividend returns of major companies. And over the last 10 years, property has performed a lot better. But if you go further back, the same hold as well. Now, the problem, however, with that is that as much as it's easy for anyone to go and buy a share in any company or a FTSE 100 tracker, residential real estate is actually quite tricky to invest in. It's not, and there are several reasons for that. The first one is obviously large minimum investment tickets. So if you look at, again, UK example, which is where we're based in the first market that we try to sort of solve, average house prices are above 250,000 pounds. And then even when you buy a place with a mortgage, put in a 50,000 pound equity ticket up front, it's something that's inaccessible for the majority of people because they just don't have that type of money lying around. And even if they do and can go through that process, they still have, there's quite a bit of a process to go through actually buying a place, and it often takes for months by the time you look at it, do all the due diligence, do all the legal sort of paperwork, etc. It's just quite a burdensome process. And then finally, even if you buy all of it, there's a lack of liquidity. So you can't, again, the same process when you buy it is the same when you sell it as well. So you can't easily sell it. And we think, and obviously a bunch of other people also are trying to tackle this problem, is it is quite a large problem because, for example, again, in the UK, there's 1.3 trillion pounds worth of privately rented residential property. So that means that all of that property is held as an investment by someone. However, a huge majority of that, 97%, is actually held by private landlords. So people who already have these few tens of thousands of pounds to invest. And there is a small amount available through institutions, but that, again, those are fund managers who then have funds of funds, and so they will charge their own fee. It's quite expensive. So there is 0% what we call sort of direct access to small ticket investors. So sort of, you or me who may have sort of some money lying on the side, but not sort of tens of thousands of pounds to buy a whole place. And that's sort of what we're trying to solve, and other obviously tokenized real estate projects, and to bring sort of home ownership or home investing to that segment of the population.
Very nice. Very nice. Actually, maybe I'll have to also jump in on this. The rest of it. Excellent. Okay. Go on, please.
And what do we do to actually solve this issue? And so we showed it through maybe some of the key steps that every tokenized real estate provider goes through. And sort of the three here on the page that are sort of highlighted in green are the same for everyone. And the fourth one is actually a bit more RealFi specific. So the first thing is something we call real estate security token. So that's the tokenization of a property. So how that sort of works on a more sort of legal way is essentially that most times we don't tokenize the property directly, so we don't go to land registry and have sort of the token referred to the land registry, but rather there's an LT, a sort of a special purpose vehicle or sort of limited private company established above each property, and that company owns the property then, and then we tokenize actually the shares in that company, just because land registry can't be registered at the moment. But that also allows us, for example, to put in a mortgage at that level to make the capital structure more efficient. And sort of that essentially, yeah. So, and when we sort of tokenize these properties, that means then that we essentially that we represent the ownership in those companies on chain. Then we do something, and this is also sort of important in reference to the previous slide. It sort of fractionalizes the property, because these tokens can obviously be very small, and then you can sort of invest from as little as the price of a coffee, for example. The next step is something we call RealFi IROs, initial rest offerings, not dissimilar to sort of IPOs in sort of real life. And this is essentially sort of the primary market issue. So this is when we offer these tokens to people, to investors for the first time. And again, this can be done for them very simply, because the property is already vetted by us, tokenized. They can just log onto our platform and buy it with sort of a single click, which again eliminates all the hassle that I spoke to on the previous slide. And then again, when they own the property, they can just sit back and relax. We will sort of arrange a property manager to manage the property, do sort of maintenance, collect rent, and then finally pay it out also to all the token holders. And then finally, and this is a very important part for us as well, is secondary market liquidity. So it's important to be able to sort of when someone has actually bought these tokens, and again, maybe you have sort of a few £1,000s lying on the side, but it's tricky to commit that money to buy, to invest, if you know that you will only be able to retrieve it in 4 or 5 years. And that's why secondary market liquidity for us is really important. And this is maybe, though we don't like speaking negatively about other people in the space, but it's also a good moment in time to look at what others have been doing. And here we have a few examples. For example, a company called Property Partner in the UK, they do sort of their fractionalized property investment platform without recourse to blockchain. And then we also have examples of Lofty and Realty, who are US market participants. And essentially what they do in terms of secondary market liquidity, they want to have a secondary market, but actually making it liquid as well. That's the tricky part. So if you look here, for example, Property Partner, they have a order book system. So what that means, you have sort of here the blue bars are the offers. So someone says, I will sell this and this many tokens at a price of 66p, at 68p, and so on. And then you have people who commit to buy tokens at, say, a certain amount at 60p, and so on. And the problem, there's multiple problems here. Obviously, there can be a miss. There can be here. There's a quite large bid-ask spread. And normally, how this works in real world, also you have a market maker who maybe sort of comes in, fills the order book on both sides, etc. But then, sort of, when you need to repeat this for each individual property, it becomes a very, very complex and capital-intensive also process for the platform, because essentially the fundamental issue really is that these are very small markets. So for every individual property, it's maybe a market capitalization in the previous example of, say, £50,000. And when you have a £50,000 market capitalization, then you just don't have enough people coming there and trading every day for this market to be really liquid. And this is something we thought about quite a bit, and sort of realized that sort of the best way to really solve this, or sort of to bring liquidity to this, and again is very much also in a sort of spirit of blockchain, is to essentially use sort of concepts from DeFi to solve these issues.
Lovely. And a quick question here.
Sure.
So we'll be talking about digitalization, with the whole concept digitalizing the real estate. But what about, let's say, laws? Do laws, can they even keep up with your concept of this project, or are they lagging behind? Did you have any problems with that?
No, that's a very good question. So one of the key sort of differences to what we are doing, so we are building something that's called a security token. So that's different to, say, utility token or exchange tokens, which is where a majority of, say, cryptocurrencies and all these other things would fall. And the issue, sort of, well, the good and bad thing, if you look at it from a legal hassle perspective of security tokens, is that what are they? They are essentially representing a security. And a security is, so according to securities law, something that offers you some either future economic benefit, and in our case, that's either a promise of future rent from that property or resale value of the property. So it offers you either an economic benefit or a governance benefit. And here you obviously have the economic benefit. We have some governance concepts there involved as well. So these are security tokens, and that's sort of that's again, that's interacting quite a bit with sort of, let's call it traditional finance, compared to all sort of, all these protocols that, people can set up from anywhere, and they sort of live in their own space that's sort of excused from traditional regulatory environments. Whereas here, we to do what we want to do and to be able to offer it to anyone on the street, let's say, we have to become regulated. So there's a number of licenses we need to get, actually, because, again, regardless of the fact that it's digitalized, these tokens, they are still security tokens, and as such, we are subject to be regulated by the regulator in the UK, which is the Financial Conduct Authority.
Interesting. Thank you for the detailed answer. Nice. Okay, let us move on then to the next part of our, let's say, agenda. Okay, let's say we have a combination for the next part of our third and fourth point for the decentralized finance concepts and your solution, essentially. Now let's see it.
Okay, so as Andrea was explaining, coming back to the issue of the secondary market liquidity, what we discovered is that the fundamental reason why there is usually no liquidity on the secondary market is that individual properties are not large enough asset classes. Imagine a bulletin board like OLX application here in Bosnia, in which people are selling portions of houses they hold. For example, Alice is selling 3% of house X, Bob is selling 2% of house Y, Carol is selling 1% of house X again. Imagine the pain of buyer trying to make the best decision there among the million of options that he has. Even worse, one seller can hang on for months and months until somebody finds exactly the house that he's selling and wants exactly the same portion of that house as this seller is offering. And the worst part here is the price discovery, how to determine the price that will satisfy both sides. So first thing we need to do here is to group these properties. So buyer will essentially have much less choice when deciding what to buy. So we would set up a new structure called Real Estate Security Token Pools, or RESPs, which you can see on the right side of the slide. RESP represents a group of portions of houses that current owners are willing to put in the pool. So these RESP tokens would typically represent the market segmentation. For example, RESP 1 could be Airbnb rented properties in Liverpool, RESP 2 could be 2-bedroom flats in Manchester, and something similar. RESPs are tokenized as well. So they exist on the blockchain, and they are also fractionalized, which means they are also security tokens. Then, after we set up these RESP tokens, we will allow investors to transfer their RESP tokens, so tokens from one property, to appropriate RESP, and new RESP tokens are minted to them. So Alice was holding 10% of this blue house, the RESP 3 you can see on the slide, and then she decides to contribute it to the RESP and gets in return 2% of the whole RESP instead. These RESP tokens yield monthly rental income coming from many underlying properties, and holding them gives investors benefits of kind of a more diversified portfolio. For example, certain property can be unrented from time to time, but that risk is spread across multiple properties now when we have these RESPs. And as you can see, RESP tokens would typically have market cap, or market cap is the total value, and that market cap would be measured in tens of thousands of pounds. And remember that's why, because the reason for that is we have under the rest we have a property and a loan, so that's why it's in tens of thousands of pounds. On the other side, RESP asset classes would have market cap of a couple of millions, and they are now large enough asset classes to have sufficient liquidity on the secondary market. And before I explain how we would organize our secondary market, on the next slide, we can see how the liquidity pools look like. So let me briefly introduce this concept of liquidity pools, which are the current core element and the golden standard of the DeFi. In traditional markets and centralized crypto exchanges, and that's something that we saw with our competitor property partner, and that was Andrea explaining, trading is organized through these order books. So people add orders saying how much assets they want to buy or sell and at what price. Then trading engine matches buy and sell orders by their prices. And that's quite inefficient because there might be a large spread or a mismatch between the prices on the sell side and on the buy side. In 2020, first liquidity pools appeared in crypto world, and they brought what I like to think that they brought 2021 DeFi summer and helped Bitcoin, ETH, and other currencies hit their all-time high. So how do they work? They are on-chain smart contracts, which means they are permissionless, transparent, decentralized, trustless. You can think of liquidity pool as a bag consisting of two assets. For example, we have here ETH and USDT. At every moment, the value, and the value is price times quantity, of one asset needs to be equal to the value of the other asset. So price of ETH times quantity of ETH in the pool needs to be equal to the price of USDT times quantity of USDT. And then we have two roles. We have liquidity providers here, and we have traders. Liquidity providers are people adding assets to the pool. So if somebody wants to add one ETH, they also need to add 1,600 USDT. Actually, now he needs to add 1,300 USDT because the price of ETH went down since we made this presentation. In any case, so if they want to add 2 ETH, they also need to add 3,000 something USDT. So they need to retain the value all the time. Liquidity pool this is kind of interesting part, is a token as well. And they are called LP tokens, serving as a proof that the person added liquidity. So if Bob wants to add 1 ETH and corresponding value of USDT, and there's already 9 ETH, so he will hold 1 ETH out of 10 ETH in there, he will hold 10% of the pool, and he will get 10% of LP tokens in return. They are also transferable, tradable, and similar. And so that's basically how liquidity provision works. And now when we have a sufficient liquidity, and traders, which are another role, now they can trade. What they do is the following. So they add one asset they add one asset in the pool and take another asset out. So if one trader wants to buy ETH, they need to supply USDT, and he takes out ETH. And the price is determined automatically because the value is being constant. So if somebody is buying ETH, it means that the quantity of ETH in the pool decreases and quantity of USDT increases. As the quantity of ETH decreases, it means the price of ETH will need to go up to keep the same value. So that's like the main core principle, to keep the value there. So that's completely an expected process that happens inside. As more people are buying ETH, price of ETH increases. More people selling ETH, its price drops. And for
it's
every
the basic economy model, scarcity more or less. More people buy, you have to give more of it, the price rises, stuff like that, more or less.
Exactly. And that's basically directly written on the chain, and the price is determined algorithmically there, not on a scale of moving the sell and the bids and offers there. And what happens also in the liquidity pools, that for every trade that traders made, liquidity pool charge them fees and distribute these fees proportionally to liquidity providers. And that has
Aydin, you're mute, I think. Sorry.
Yeah. Now it's okay, I think, Aydin. Go on, please.
Yeah. Can you hear me?
Yes.
My mic plugged out of the.
No worries.
Laptop. Yeah. So as I was saying, there are trading fees paid by traders, and they are distributed proportionally to liquidity providers. And however, there are sometimes very low trading volumes, and then liquidity providers are not motivated enough to provide liquidity, even though that should serve like the main motive for liquidity providers, these trading fees, for them to provide liquidity. And then, because there's sometimes this kind of low trading volumes, they're not motivated enough, we need to introduce here a new concept called yield farms. Yield farms are, again, smart contracts that allow LP token holders, these liquidity providers, to lock their LP tokens for a certain period of time and get additional reward besides just trading fees. That reward is usually in the form of a utility token or another cryptocurrency. For example, on PancakeSwap, yield farms distribute cake token. On SushiSwap, yield farms distribute sushi token, and similar. And now liquidity providers can go and sell these reward token and make additional money out of it. And now they should be kind of sufficiently motivated to provide liquidity. And now coming back to RealFi again after this bit longer introduction, what liquidity pools are. Our secondary market will be organized through exactly these liquidity pools, meaning that for every RESP token, we will set up a separate liquidity pool consisting of that RESP token and a stable coin, let's say USDT. And also what we will do, we would set up yield farms for every liquidity pool to reward liquidity providers. And we will distribute RealX, our native utility token, which we expect to issue next year. So RealX is essentially a farming token on our side, which helps us to reward our users, not only for liquidity provision, but for also many other in-app activities. Essentially, RealX has a purpose to help us onboard as many investors as possible to our ecosystem and to guide them to use the application in a way that's most beneficial for everybody. And on the next slide, let's kind of demonstrate what you would, for example, as an investor, would be able to do in our ecosystem and what rewards we offer through whole user journey in our application. So we have Bob here, who's user/investor in RealFi application. What he does, he comes to our application, he clicks through all the properties that we are offering, finds what he thinks is the best property. He invests in the process, which we call the initial REST offering. So that's like the first time when we sell these real estate security tokens. And now Bob, buys a certain number of these REST tokens, which represent a fraction of underlying property, let's say apartment in Manchester. He can sit and relax and earn from monthly rental income and potentially capital appreciation of underlying property. And that's not something very specific to us, to be honest. That's most of these kind of real estate tokenization projects do. However, our innovation comes in the following steps. First, Bob can convert his REST holding to RESP. That's something that I was explaining before, that investors who hold these REST tokens of different properties can join them together in a RESP, real estate security pool, consisting of many different RESTs. So he transfers his REST tokens to RESP, and in return, new RESPs are minted to Bob. As this process is kind of very important for us, we would reward Bob with the RealX. After that, Bob can put his RESP tokens together with a stable coin, or USDT, into the liquidity pool. So other investors can buy and sell RESP tokens against that liquidity pool. Liquidity pool would charge a certain trading fees, 1.5% in our case, on all trades, and distribute these fees to liquidity providers proportionally. So Bob earns also from these trading fees. And finally, Bob can farm his LP tokens he got when he provided liquidity, meaning to lock them in this yield farm and then get additional RealX as a reward. And as you can see, Bob is kind of very rich and happy at the end of his journey, because he not only got British pound from his investment in real estate, but also a lot of RealX for his activities in the application.
Very nice. Very nice. Guys, we'll have to talk later. I think we'll have to talk about an investment here. I want to be Bob.
Everybody wants to be a Bob.
Everyone wants to be Bob. Nice.
Okay.
Nice. Okay.
Yeah. So basically, that's basically some kind of a user journey that we will have in our ecosystem. But on the next slide, we can see how that actually will look like from the user perspective. So we will build a RealFi application as a mobile and a web application, and it will serve as a main gateway to our ecosystem. So investors, after downloading the application and setting up their profiles, can use the application to preview all the properties that we have there, and they can choose what one they like, invest as much as they want, and they can pay with a crypto, and they can pay also with the fiat money. So they can use popular payment methods. They can pay with the debit cards, they can pay with the wire transfers. And as I said, we plan to support fiat payments and crypto payments there. After they do the purchase, they can view their holding, and they can also vote on governance topics around every property they hold. For example, from time to time, there will be a need to refurbish the property between two tenants, and then possibly increase the rental yield, and then the holders can vote whether to go for the refurbishment or not. Also, they can use the application to follow the rent collection, withdraw collected rent at any time. It's important to mention here that this rent is paid out in a fiat money, in the British pounds, as the properties are in the UK. The application will also offer them all this kind of secondary market innovation we have, so they can use the application to convert their RESP to RESP token. They can use it to provide liquidity, to farm RealX, and also they can manage and trade their RealX holding within the application. And essentially, as you can see, the application is something like eToro meets Airbnb. The application will be very gamified and very easy to use. And we wanted to make it primarily accessible to non-crypto native audience. We've seen many projects which are kind of heavy with crypto in the sense that you need to set up a wallet to get a native coin from the chain, pay with that token, sign the transaction, and things like that. And that's kind of a big hurdle for many non-crypto native users. In our case, investors will have an option to work through custodial wallets, which means that all complexity around signing transaction, paying for the gas fees will be completely hidden from them. If they don't know a thing about blockchain, they wouldn't even know that it's powered by blockchain. And then, but the application is not the only thing that we are building. On this slide, you can see also other components we are building. Below the application, we will develop our operations layer. It's essentially our internal back office software component that will allow us to onboard and manage these tokenized properties, to collect and distribute rental income, basically all kind of back office work. And finally, at the core of our technology is a blockchain. So we intend to use a public blockchain to deploy a number of smart contracts. If I haven't mentioned before what smart contracts are, because I don't know how crypto native are the audience listening to this. Smart contracts are essentially pieces of executable code that runs directly on the blockchain. So it's executed on the node directly, and the code of it, and together with the results of every execution, is directly written on the blockchain, which means it's unchangeable, it's permanent there. So we will use a public blockchain to deploy a number of smart contracts. So we will use it to issue our security tokens, REST tokens, and RESP tokens to facilitate this initial REST offering process, to allow direct on-chain governance or voting on different topics around every property. Also, we will use smart contracts to allow secondary market. We will set up liquidity pools against smart contracts, consisting of RESP tokens and USDT or some other stable coins. And we will also reward this liquidity providing through yield farms, another smart contract. And finally, we will, of course, use blockchain to issue RealX, our native utility token, and to deploy smart contracts for vesting and staking. These are kind of usual stuff around utility tokens. And why we need a blockchain? Yeah, that's a question that often comes from people we are talking to. And we need a blockchain not only to make the whole process transparent, secure, and resilient to malicious attacks, but also to make transaction of these fractional ownership, which are quite small, very fast and very inexpensive. However, the greatest benefit of the tokenization in our case is the ability to plug in our system into the DeFi world and to allow secondary market liquidity through these liquidity pools and rewarding mechanisms, as I explained before. And as you can see on this slide, we've selected the Polygon as the blockchain of choice. I will not go very much into the technical details now about the reasons behind this decision, but I would like to emphasize three kind of key benefits of a Polygon. First, they kind of use environmentally friendly proof-of-stake consensus mechanism, and they are carbon negative from the current year. That's the first thing. Secondly, they're highly interoperable with Ethereum and other Ethereum sidechains. It means that if anything goes wrong with the Polygon, we can easily switch to other chains in future if necessary, and keep all the holders tokens as they were on the Polygon. So that's very easy to do with a Polygon. And finally, Polygon has a very large community and ecosystem around it. We can easily tap into that community and work with many other projects which are building currently on the Polygon. And also what helps is that Polygon has quite good reputation outside this crypto native audience, as we like to call them, that they gain through a number of partnerships such as Instagram collectibles, Starbucks loyalty program, Disney Accelerator, Robinhood crypto wallets, and many other important Polygon partnerships. Okay, now you've seen what we are building. I'm handing over first a bit to Pavel and then to Andrea to explain you what else we are doing except for building technology.
Well, thank you. Just for this year, a small part, we will have to just interrupt it for a little bit because we also want to thank our great sponsors, ZooDirect and Ancora, for supporting our stream and supporting this great topic with our great speakers. Okay.
Moje ime je Bobby. Moji vlasnici nisu bili posebno kreativni kad su mi birali ime, ali to sad nije važno. Dugo vremena su me hranili sa obrocima koji ostanu iza njih, ali i sa brojnim nezdravim proizvodima prepunim koncentrata i hemije. Mislio sam vremenom da ću se pretvoriti u plišanog ili plastičnog psa.
Srećom, otkrili su bon apetit hranu za pse i mačke, od pažljivo biranih i najkvalitetnijih sastojaka bez GMO supstanci. Pozivam vlasnike da obraduju svoje ljubimce i da u najbližem pet shopu ili na web stranici zoodirect.ba naruče bon apetit premium hranu. Volimo da se mazimo, ali zdravlje nam je na prvom mjestu. Bon apetit!
Well, Bobby seemed like a very happy dog. Now, one more thing. Also, before we go on, we also had a few questions, even though our Q&A part is at the end, but I think it would be nice to get in a few of these questions that we had. Now, a question that we had by Bilal Shehovic was, you mentioned property managers, and what does that person do, and does that person receive a fee, or how does that go?
Yeah, of course. So the reason why one of the reasons why we're based in the UK is obviously I live here and I'm very familiar with the market, but also there is a very good sort of industry surrounding that sort of the whole aspect of property investing. And the property manager, what they do is sort of all the things that are sort of, let's say, the day-to-day management of the property and of the tenant within the property. So they will, for example, and again, there's different service packages, and of course they don't do this as a charity, so they do charge these services onto. But when you look at sort of bigger picture and the hassle of doing it and so on, and the economies of scale they can have, it's obviously something that often makes sense for people. So they will, for example, go out and put out an advert that the flat is up for rental, so people can apply for that. They will select a person to actually rent there, sort of go through background checks and so on to make sure that person will be able to pay rent. Then in case there's any issues with the property, so for example, boiler is broken, ideally if I'm a sort of investor, I don't have then the tenant calling me directly, but rather they call the property manager goes out and fixes it. Maybe the property manager's put in some sort of insurance, or we've done it together to get that fixed and so on. So there's this whole sort of number of things that sort of deal with the day-to-day management of the property, that sort of they take the hassle out of that for the owner of the property, if you like.
Lovely, thank you. And let us go into another question, and then we'll move on. By Zlatko Lomerovic, how many tokenized properties are there at the moment?
So for us, we'll get to that in a moment. For us, our platform personally, we haven't tokenized any properties yet. We are yet to start with that in the next year. But in terms of sort of the broader industry, there are quite a few. There's no sort of big register of sort of all tokenized properties, but there are actually, for example, Lofty and Realty, who we mentioned earlier in the US. They're sort of, they don't have the secondary market aspect, but they're very nice businesses and do things in a very good way. And they both have sort of roughly 150 tokenizations to date. So yeah, those are the rough numbers, and there are projects also springing up both in the US and in Europe, and some of them also do it sort of in the non-blockchain way, of which there are more, but there are also sort of more and more blockchain-based businesses, and this comes and goes also in waves a little bit. So I think there were some initial tokenization projects as early as 2017, but that, back then, if you also, if everyone here also asked themselves how much they were, how much they knew about blockchain back then and so on, it just wasn't as mainstream as it is today. And then when you take something as property, which is very much, again, as I mentioned before, with the legal aspects and so on, so very much interacts with the real world, then that was simply a bit too early for that. Whereas today we think it's in after, again, DeFi Summer 2021 and so on, it's a much better moment in time to attempt this kind of thing.
Yes, like the whole process matured a little bit.
Yeah, exactly. And people are more, even when you look at institutional finance, some of the big, if you take JP Morgan, for example, our CEO was for a very long time incredibly anti-blockchain and so on, and now they have dedicated desks and so on. So, and all of the major, also traditional finance businesses, they're also sort of taking it more and more into account.
Interesting. Thank you. We've also received a few more questions, but I think we will leave that for the end. And for now, let us go on with our next part. go on.
Okay, cool. So no, I mean, speaking of the property management question, it's a very good moment in time here because essentially so once we have sort of these properties tokenized next year and onwards, it will allow us to become sort of a large-scale landlord ourselves or through for our customers and investors through us. And that's really good because I mean I think it's a truth that holds in most places. Landlords are not sort of the most favorite type of people, and in general, tenant experiences with landlords are suboptimal, let's say, and that leaves a lot of space for improvement. And that's something we want to sort of implement throughout the whole process of buying, owning, and managing a property. And for example, when we go out and buy properties, there's a lot of fun things you can do, which is easier to do when you're doing them at scale. For example, looking at sort of data signals to see, okay, a nice new shop will open in a certain area, house prices will go up there. Let's buy there before the shop is open. Or a new train station will be built somewhere. That means people from there will get easy into the city. You can have young professionals living there who couldn't live there before, etc., etc. So that's some of the things we want to do, for example, on the sourcing side. Then similar sort of on letting and management. Again, this is sort of an experience that, as mentioned, is not ideal for most people. I gave the example sort of when the boiler breaks and if you have just a regular landlord, it's a whole hassle. You need to call them, they need to call someone, they need to pay for it, and so on. And there's a number of platforms, again, in the UK that sort of offer you to streamline such issues on a sort of larger scale. And you can have just a tenant who has an app and they don't even need to call you or anyone. They just put there in, okay, I have this and this maintenance issue, and that sort of sends a team to fix it. And so on. It makes it easier for the tenant, it makes it easier for us. And then again, because it's easier for the tenant, it also means that obviously there is a higher rental yield to be achieved because all those properties are then much higher quality properties than they were beforehand. So those are some of the things that we want to implement there. In terms of when this all happens, so I mentioned sort of the properties will start getting tokenized next year. So where we as RealFi are at the moment, and again, there's other platforms that are at different stages of their development. But we are currently sort of trying to raise pre-seed funding for our platform. And that will allow us essentially to have the funds to focus on two chief things. One of them is building the product, so all of the stuff that Ajdin's been mentioning. And the second thing is obviously the legal application process. So we will have to go through a consultation with the Financial Conduct Authority and get all of these licenses that we need to have to be able to offer our product. And yeah, in corresponding to that will also be our hiring plans. So starting next year, and that's to any developers maybe listening and so on, we will be hiring a team for that in Sarajevo, both sort of backend, front end, mobile developer, QAs, and designers, sort of full team for our app. And at the same time, we will also hear more on the UK side, be hiring a compliance professionals to help us with the FC applications. And then once that is sort of the bulk of that work is done in the first half of next year, we can sort of also have marketing and real estate operations team, and that will put us sort of in a position to tokenize our first properties in the second half of next year, and then also offer these tokenized properties to our customers / investors. And yeah, once we do that and continue tokenizing properties and offering them to people, that's obviously not the only thing that we want to or plan to do. There's a bunch of sort of more expansions onto our product that we can do and that are quite interesting to us. One example is crypto loans. So because our real estate security tokens, they will all be on chain, and then you have also sort of, for example, the rent distribution, to which wallet it goes, and so on. That's all on chain. So it's actually a very useful collateral for crypto loans. So you can take a real estate security token, deposit it to someone, and you can get a loan back in Ethereum or something along those lines. Or any other sort of crypto. And then another thing we really want to do is obviously expand. We're starting with UK residential market because it's a market we know quite well. It's a market that's well supported by sort of, as mentioned, property management industry and similar. But it's obviously just the start, and we want to also go maybe into commercial, warehousing, industrial, and not just obviously in the UK, but throughout Europe and later on globally as well. And then similar to this geographic expansion, there's obviously also expansion into the metaverse, where all of these things also hold for the metaverse. Parcels have been quite expensive, a bit less this year with the collapse of land prices there, but they have been quite large, and you can fractionalize them. But also, again, there's liquid secondary market missing, which we can solve. And then another thing that we really hold dear is sort of a new ownership model. So essentially, again, we start with sort of fully owned residential properties, but it would be really cool also, for example, to use this tokenized concept, for example, for social housing. So you can have, for example, local authority come in with someone who maybe wants to donate some money or not, and then essentially maybe the tenant living there also has an opportunity through time to buy up tokens steadily in the property and get ownership of the property they lived in. Likewise, home equity release. So, for example, if you own a property but need some cash, you can tokenize your property and then sell those tokens for cash to use that for, I don't know, invest or anything else. And then sort of the more standard things also sort of shared ownership over leisure properties and so on. And then finally, obviously, we would also like to have people more come to us and these and sort of onboard their properties, sort of with this, for example, equity release, but also to really integrate security tokens in broader other investment ecosystems. So for now, every sort of tokenization platform that will include us as well, you have to go on their website, buy those tokens there, and so on. But we're really good in the future, and it will happen, is to see actually those tokens available not just through every platform individually, but if you plug into your eToro account or Robinhood, if you're in the US, you can there also have an opportunity to buy these security tokens, and that's something that I think we'll see more and more in the future. So yeah, that's we've talked for quite a lot.
Excellent. But
As
let me
usual.
now jump.
But, yeah, very looking forward to the questions.
Excellent. But let me also jump in with now that you've also we saw the possibilities of your product, especially really it's limitless, almost limitless, let's say. And I want to jump in with a very interesting example that I have when saw the metaverse. Though this was, let's say, a period I read it once in an article, and it was pre-metaverse period. There was a man who actually in a video game he saw a piece of digital real estate that was around, I think, $200,000, something like that. And that was like he was maybe one of the first people who even got into digital real estate. He actually put mortgages on his own home where he lived with his family to buy that digital property. And interest for $200,000, like probably people would think he wasn't very sane or something like that, because it's such a gaming principle. While today it's becoming more and more normal. And the person bought that digital property, and he actually returned. He lived off it essentially. He rented it out. He organized digital parties. Also, it was really interesting. And it's great you guys are also considering digital real estate. Excellent, fascinating. Thank you for your great presentation, and let's go into the question that you also received. We have a couple, so I'll also try to speak fast. Now, I'm sorry if I don't pronounce the last name correctly now, but we have a question by Pablo Lovenstein. He asked, are there any, and this ties into the FCA approval, are there any companies in the UK selling security tokens? And how do you expect to get FCA approval for issuing security tokens? Or do you plan to get it on the way, because there is a company that started like you, MyBricks from England, and they have still not gotten FCA approval for more than a year?
Yeah, no, that's a fair point, and we did follow MyBricks and what they've been doing, and I would say so. What we did, so we launched, so we started RealFi earlier this year, and before that we obviously had full-time jobs, which we decided to quit to focus on this fully. But before we actually quit our jobs, for us it was it's a question, the same question we asked ourselves as well, and we decided to, we first sought out legal advice, and we decided to mandate a law firm, CMS. They have offices in Sarajevo as well, who then we sort of went through the process of, okay, is this actually doable? And they said, yes, it is. It is. I mean, you never get something for nothing. So it's not, okay, hello, can I have a license? It is a 6 to 9 month process, which is what they advised us. yeah, so it does take a bit of while. You have to hire a compliance person and so on, but it's something that is doable in terms of. So there were two additional points just to answer. So in terms of, are there any companies doing this in the UK? There is one called Arcax, Arhax, ARCHAX. They are sort of a digital marketplace, and they got a license to sell various digital assets themselves there. So they are the precedent in terms of digital assets regulation. And actually, it's not digital asset, but Property Partner is a good example also in the sense that they do something very similar, just not blockchain based, and they got a license. In terms of MyBricks, we looked at them, and they essentially, whereas we sort of very early tried to see how we need to engage the FCA and so on, they haven't. They sort of had they only started it a bit later in their journey, and I think for them it's a bit a different model as well, because they essentially they are selling something that they wanted to sell as a utility token, but they would have, I might be wrong because I haven't looked at them sort of very recently, but they sold utility tokens, which then they sort of tried to make also a security token. Essentially, you buy a utility token, they so call a brick or something like that, and then you would also get part of the revenues that they're getting from these properties that they're setting up and renting out. So that's where they sort of differ in that respect, and why we sort of are on a pretty good path, I would say, when it comes to the regulatory approvals.
Thank you for that very detailed answer. And let us go into the next question also. Now we have another question by Zlatko Olomerovic. Have you considered Polkadot?
Yeah, actually, yeah, we did. We did a very thorough analysis of the chains. Well, the Polkadot, it's like the internet of blockchains, something like a cosmos. So basically, if we are not setting our own chain, because that would be kind of over engineering from our side to run our own chain, because we have very narrow and very specific use cases of the chain there, and we need to use existing chains and not to spend too much time on the infrastructure side. And then if we would go with the Polkadot, we would need to go with the Moonbeam or Moonriver and Kusama, and they are currently, in my opinion, inferior to Polygon in comparison of the number of projects that exist there, size of the community, interoperability, and many other aspects.
Excellent. And we will do two more questions and we will stop there. I think we are tiring out our superstars here already. So we have the next question by Yasmin Elkazovic. Let's say your product attracts a large number of new investors to an already heated market. How will this impact the average property price?
Yeah, no, I mean, it's a good question, and it's a bit, at the end of the day, our platform is more of a conduit to, what people want to do, and real estate investing has historically been excellent. What we see, for example, now this very month in the UK, and I'm not doing the best job of selling our platform maybe here, but obviously interest rates have shot up quite a bit, and as a consequence, obviously that means that everyone who's buying a place with a mortgage, and that's the vast majority of people, the amount they can spend on a house drops quite a bit, and therefore also house prices are negatively impacted. So I mean, to answer the question directly, sort of, if obviously we create a huge additional demand for properties, yes, it would have a increased upwards impact on the market, which has been quite has been heating up for a while, but again, it's sort of for each investor to make their decision in terms of what they want to invest in and so on. We're not, again, over the long run, property is good because it has some very fundamental aspects that other asset classes don't have, and the most important is basic need and scarcity. So residential property has that. So everyone needs to live somewhere, and there's a finite amount of space we have on the planet, and the growing population still. So as long as that's the case, it will be sort of over the longer run a great investment. But obviously, market goes up and down, and then it's for every investor to make their own decision in sort of where they want to place their assets.
And if I can add to this, if we kind of become as that successful in the UK market, that we see that we make tectonic changes in the housing market in the UK. We plan to spread to other markets as well, because we have whole European Union, we have US, we have South Asian countries, which are very growing markets there, and then we can spread it around, so not to make a huge impact on the price in the UK.
Sounds like there's a lot of work to do. So it's very exciting also. And let's do, what are the, for investors, are there any restrictions for them? Age restrictions, can only UK citizens buy property, invest in properties, and things like that?
So this is somewhere in terms of who can buy the property. That's something that's essentially limited by the local regulators. So we've talked a lot about getting the FCA approvals and so on, and that's quite important for us because they're the local regulator in the UK. But that essentially really only that allows us to sell these property tokens in the UK. Now, obviously, it depends sort of if people really want to try hard to go around those rules and invest from another jurisdiction, they probably can. But we would try to essentially prevent that until the moment we actually have approvals in those local jurisdictions. So, for example, in Bosnia and Herzegovina, the local securities authority will actually, if we sell these tokens to someone, they could go out and sue us because we sort of did that in a way that's not licensed, and it doesn't mean we did anything sort of actually bad as such, given, for example, we would be already regulated in the UK, but obviously every regulator has the right to protect their the citizens under their authority in the way they seem best.
Interesting. Very good. Thank you for that answer also. I think we have a few more questions, but I think we already went over the 1 hour mark. I think it was a pretty interesting topic, but I think we should stop it also now. And for everyone who has any other questions, I'm pretty sure that Ajdin and Andrea would be happy to answer on LinkedIn or some other channel of communication. Yeah, feel
free to reach out. We should be on the LinkedIn invite to the event, and then also our website is realfi.co, and you have our contact details there as well.
Excellent. Thank you, guys. And we want to thank also our sponsors, Anchor and Zoo Direct, for helping us in supporting this project, let's say it like that. And thank you, guys, and we wish you a lot of luck with your project. And I hope you spread to the Balkan market, to Bosnia. We want to invest, guys. We want to invest.
Yeah, thanks, Pavel, so much for hosting, and thanks for everyone who dialed in and also contributed with the questions. It was a pleasure.
Like that. Thank you. Thanks to everyone. Excellent. Thank you, guys.
Moje ime je Bobby. Moji vlasnici nisu bili posebno kreativni kad su mi birali ime, ali to sad nije važno. Dugo vremena su me hranili sa obrocima koji ostanu iza njih, ali i sa brojnim nezdravim proizvodima prepunim koncentrata i hemije. Mislio sam vremenom da ću se pretvoriti u plišanog ili plastičnog psa.
Srećom, otkrili su Bon Appetit hranu za pse i mačke, od pažljivo biranih i najkvalitetnijih sastojaka bez GMO supstanci. Pozivam vlasnike da obraduju svoje ljubimce i da u najbližem pet shopu ili na web stranici zoodirect.ba naruče Bon Appetit premium hranu. Volimo da se mazimo, ali zdravlje nam je na prvom mjestu. Bon Appetit!